Welcome to the Seeds of Wisdom Team channel dedicated to education sharing wisdom of RV, GCR news to projects and current news. Today we're diving into the fascinating role of gold in the modern financial system. Gold has captivated civilizations for millennia, prized for its beauty, scarcity, and inherent value. But in our modern world of complex financial instruments and digital currencies, does gold still hold relevance? The answer, in short, is a resounding yes. From its historical significance to its current and potential future roles, let's explore why gold remains a cornerstone of economic stability. For centuries, gold has served as a reliable store of value, a characteristic rooted in its inherent scarcity and durability. Unlike fiat currencies, which governments can print at will, the supply of gold remains relatively constant. This fundamental difference becomes particularly important during periods of inflation. When central banks increase the money supply, the purchasing power of fiat currencies erodes. This phenomenon, known as inflation, diminishes the value of savings and investments denominated in those currencies. Gold, however, with its inherent value and limited supply, tends to retain its purchasing power over time, acting as a hedge against inflation. Central banks, the institutions tasked with managing a nation's monetary policy, play a crucial role in the global financial system. Interestingly, despite the evolution of modern finance, central banks around the world still hold significant amounts of gold in their reserves. But why is this the case? What value does gold bring to these powerful financial institutions? The answer lies in gold's unique position as a global asset, free from the control of any single government or political system. Unlike fiat currencies, which are subject to the policies and stability of their issuing countries, gold is viewed as a neutral and universally accepted form of wealth. The world is grappling with unprecedented levels of debt. Governments, corporations, and individuals are increasingly leveraged, creating a fragile economic environment vulnerable to shocks and crises. In this context, gold emerges as a potential safe haven, a beacon of stability in a sea of financial obligations. Why does gold shine during times of debt distress? The answer lies in its intrinsic value. Unlike paper currencies, which represent a promise to pay from a government or central bank, gold is inherently valuable. The global financial system, built largely on fiat currencies, is facing growing scrutiny. Critics point to its inherent instability, its susceptibility to inflation, and the unchecked power it grants to central banks. Amidst these concerns, some economists and policymakers are re-examining the role gold could play in creating a more stable and equitable monetary system. One of the most discussed proposals is a return to the gold standard, or a similar system where currencies are backed by physical gold. While such a move is not without its complexities and challenges, proponents argue that it would bring much-needed discipline to monetary policy, curbing inflation and reducing the likelihood of debt crises. The allure of a gold-backed system stems from the perception that gold's inherent value would impose a natural limit on the ability of governments to create money. The rise of digital currencies and blockchain technology is reshaping the financial landscape, prompting many to ponder the future of traditional assets like gold. However, rather than being replaced, gold might find a new purpose in this evolving digital realm, potentially serving as a stabilizing force and a bridge between the physical and digital worlds of finance. One compelling concept is the backing of digital currencies with physical gold. Some proponents envision a system where each digital token is backed by a specific amount of gold, providing a tangible asset base and mitigating the volatility often associated with cryptocurrencies. This approach could foster greater trust and adoption of digital assets, attracting investors wary of their intangible nature. Thanks for watching. If you found this video insightful, don't forget to like, share, and subscribe for more deep dives into the world of finance. We explored the multifaceted role of gold in the modern financial system, from its historical significance as a store of value to its potential future in a world increasingly driven by digital assets and evolving monetary policies. While gold may not always be the most prominent player in the financial markets, its underlying fundamentals and enduring appeal ensure its relevance for generations to come. As we've discussed, gold acts as a hedge against inflation, a safe haven during times of uncertainty, and a potential cornerstone for a more stable and equitable financial future. Let us know in the comments what aspect of gold's role in the financial system you find most intriguing. Don't miss a notification when we have facts. We will send out information. Subscribe to YouTube and newsletters today.